So China basically freed up $70 billion for the banks and cut their RRR to provide more liquidity, ample liquidity for the system to ease conditions. Now, why is China doing this? What does this mean in terms of the economy? What does this mean in terms of all the markets around? And at the same time, why are they going and locking down main cities while creating more pain for their people and creating more pain for people outside as well when they can simply just open up their borders, ease conditions, and go back to normal? Well, this China pivot or this easing that people may think that is good for the Chinese equity markets may actually not be so. And I'm more on the side that this easing is actually a warning sign for what is to come even in the US markets, the equity markets, right? If you look at the US equity markets, a lot of traders are hoping for this Fed pivot to come out and this rate cut to come and help and save the equity market so we can reach all back to all-time highs. Same thing with China basically cutting its RRR and easing conditions. It doesn't necessarily mean that things are getting better. It's just a warning sign that liquidity is a problem, that they may have to ease conditions because lending towards the property companies out there may need help easing conditions so that their companies don't fully implode and that they could last this recession that is expected to come. And same thing, when we saw previously in previous recessions, China has been cutting their rates, easing conditions, and that doesn't necessarily mean that the equity markets and everything else is going to start doing better. Same thing with the Fed back in 2008, back in 2000 and 2001, right? We had rate cuts and the market still sold off. So today, with this easing news that is expected to come, plus the lockdown and scares and the Chinese protests, we did see today in the overnight session, the Asian markets basically sell off. And again, this is not a signal, and I'm not saying that this is a signal that things are going to get better. This is a signal that things are not looking good, thus the reaction that the pboc needs to do in order to create some sort of easing condition. Now, why don't they open up, right? Why doesn't China go out and completely squash the lockdown measures? Why are they doing this, right? Plus providing these easing conditions. Well, big reason is they want to bring down inflation. Now, isn't easing a problem when it comes to bringing down inflation? Wouldn't it make it worse off? Yes and no. Yes, easing conditions does uplift inflation, but then when you lock down your country, especially China, its main purpose for locking down its country is to tame inflation, to not bring in that money or to get a lot of foreigners to come and spend a lot of money to buy cheap goods. That's why we're seeing now the reverse of, for past 10 years plus, a decade or two, where we had globalization and we had a lot of the West depending on cheap goods. We're seeing that reverse because of this lockdown, because of this COVID virus, and China basically wants to stay in lockdown to withstand, not have that high inflation that the West is seeing come into their country, and also bear what is to come in about a year or two or whenever, this recession that is expected to come. So they start easing now, and these are the signals, and we can see these signals in previous recessions where China has done similar actions, where they cut their RRR and done some easing conditions. And what happened afterwards? You saw some sort of recession. You saw some sort of decline in the economic activity. So don't be fooled. Don't think that this easing, this cut, or quantitative easing, whatever you want to call it, the China pivot, the Fed pivot, no matter what country you're looking at and what policies these central banks may be doing, don't think that, okay, this is the pivot and now we're going higher. Sure, it may mean that little bit longer term or medium term, but initially, don't get fooled by the hype that the media might be putting out there, because that is not necessarily true. It is just an action being taken before the actual disaster comes. And we will see, with the yield curves basically inverting at very deep levels, and we see also oil in contango basically suggesting that prices today is lower than versus down the road, which basically suggests that the weakness in demand and that we may have more supply according to the contango, even though it may not look like that. That may suggest, again, another recessionary signal, along with the China lockdown measures, plus its RRR cut and its easing conditions. All of this is feeding up into this whole disaster that is expected to come. Anyways, guys, again, my name is Daniel, if I didn't mention it in the beginning of the video. And if you're interested in more content and video like this, subscribe, hit the like button, the bell icon to be notified on the next video, and I'll see you guys around. Cheers. Bye.